Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics in the Phoenix airport today. But airport or not, the inflation is not slowing down. So who knows who will overhear this broadcast? Yet let us dig in because while I know there are people around the globe fearful of the low inflation pandemic, looks like it's picking up fast enough. Keep in mind, supposedly we're not in an economic crisis like in 2008. At least if you look at the doctor numbers. But here, inflation speeds up in April as consumer prices leap 4.2%. Holy Jesus. I think it's safe to say, I don't ever remember seeing a number that big. They'd looking for just an increase of 3.6%, which is quite massive. I think above the 2% inflation mandate, but I know Jerome Powell said that several times. I mean, he made clear that, if there's an inflation deficit, they're ready to make up for that. And obviously, I get the emails all the time. You guys aren't getting the opportunity to pay enough at the supermarket. Well, those construction companies that use things like lumber and copper seem to be surviving the inflation deficit, but let us dig in. Fortunately, Federal Reserve officials see this current rise as temporary and not likely to influence policy, which is about right. Keep in mind, this came out at 8:30 yesterday. You can see in the face of all that inflation, I'm recording on Thursday, here's Wednesday. So it looks like right about there, where silver gets trades down, then spikes higher. But, is what I would have expected on a number like that before getting clobbered the rest of the day. And actually, this is a pretty special spoof right there. If you saw the volume chart on that one, it would make perfect sense. Although, in fact, let us show you the volume chart on that one. And there you go. You can see the volume in blue, which most likely has no connection to the price falling off a cliff, then spiking up, then coming back down, all as we were getting a historic inflation reading that fortunately is just temporary. Although if you're asking, if you're sitting there and you're flying solo, they're looking at the Fed's balance sheet, and this doesn't seem so temporary, I guess I'd have to agree with that. Again, I don't have a Goldman Sachs background. Interesting though, here if we look in October of 2010, you see the balance sheet at 2.3 trillion. So it's almost quadrupled since then. And of course, here was Ben Bernanke with his op-ed he used to sell QE2 that I guess we're still waiting for it to kick in because as he mentions here, this approach eased financial conditions in the past and so far looks to be effective again. Stock prices rose, long-term interest rates fell as investors began to anticipate, front-run the action. Easier financial conditions will promote economic growth. For example, lower mortgage rates will make housing more affordable and allow more homeowners to refinance. Let's tack on more debt. Here's the money shot. Because higher stock prices will boost consumer wealth and help increase confidence. If Ben Bernanke is familiar with the term misplaced confidence, which can also spur lending. And then, as if that's not enough, increased spending will lead to higher incomes and profits that in a virtuous circle will further support economic expansion, which sounds great, certainly. The only thing I remain confused by is how here it is 10 years later, interest rates are now at 0% again. They tried to raise them, they got to 2.5% in the end of 2018. And anyone who had a stock portfolio back then remembers exactly what happened. But this is likely just transitory, despite accelerating at its fastest pace in more than 12 years. Because you see here the Consumer Price Index, which measures a basket of goods as well as energy and housing costs, but subtracts up all the things that actually go up in price, still rose 4.2% from a year earlier. Because I know You thought I was just being a smartass saying they strip out everything, but here you go. Excluding volatile food and energy prices, the core CPI increased 3%. Now, I don't know why they volatile food and energy prices, as you can see, I believe they still calculate this as a year-over-year rate, which would smooth out that volatility. I don't know if anyone's been facing the low inflation. It seems volatile in one way, has not been tamped down by the CFTC yet. So anyway, this was faster than even before Ben Bernanke gave the world his circle of virtuosity. So anyway, Fed policymakers and many economists are discussing the current round of numbers as transitory, of course. Just like in the Big Short, it's just a little gully. Market's coming back. Lumber prices alone have risen 124% in 2021 amid persistent demand for building materials. Copper, often seen as a proxy for economic activity, has jumped nearly 37%, which certainly would support the, this is going to come back anytime soon. Anyway, as you can see here, silver shot up, then got pummeled on this news that I'm sure made everybody watching now run up to check in with Andy Schecter. He must have been swamped with the sell orders yesterday. Well, just a thought, when you see something like this, that it spikes up first before coming down, I wonder if it reminds anybody else of the email that Andrew Maguire wrote to the CFTC 10 years ago. I haven't gotten a comment on that one either yet, but I did call Mr. Benham this morning for some more commentary. And yeah, here you go. Scenario one, the news is bad, employment is worse. This is with CPI and this thing, but here he's talking about employment. This will have a bullish effect. Draw bids, spiking them higher. This will be sold into in a very short time. So basically, if on a fundamental basis, the news would support a higher silver price, he says they're going to spike it a little higher. It's going to draw bids, going a little higher, and then get clobbered with thousands of new short contracts being added, overcoming any new bids and spiking the precious metals down hard, targeting key support levels. Of course, if it's bad for metals, they just result in a massive short position being instigated almost immediately. And again, just in case anyone's wondering how that played out, well, there you go. So anyway, there is silver tamped down. And as I mentioned, I did call the CFTC again today. I think my next question, I'll see if I can get an answer to, is that if the greatest buying spree in the history of silver, soaring inflation, are not enough to raise the price of silver, I wonder what is. Or maybe, I don't know, maybe we should all just short paper silver and see how that goes. But anyway, I'll let you know when we hear back from the CFTC. I think we have a better shot of getting the Fed's balance sheet down to underneath 2 trillion. We will see how that goes. Although in terms of powerful updates, we did get a response from the LBMA today about miscounting like 100 million ounces of silver. But fortunately, it has nothing to do with the 118 million ounces that were added on Silver Squeeze weekend that I nor anybody I know can figure out how that metal was added while the price fell 10%. But here, just so you can hear what they say. Incorrect information regarding March silver stocks, which has now been amended, arose from an incorrect data submission. There's no link between the reporting error in March and the activity in the silver market at the end of January. So that's completely unconnected. LBMA is working to ensure such a mistake does not occur in the future. That's good to hear. Reviewing internal submitter controls, as well as looking at controls in place for trade reporting and other stock marketing, reporting, safeguards, precious metal vaults. Well, here's a question. If you have your metal stored in one of these vaults and they just miscounted, how safe do you feel right now? I would answer that, but I don't put anything in any of these vaults. You gotta be nuts myself, but hey, currently LBMA queries any submission which is off trend that previous submitted numbers asked for the submitter to reconfirm their numbers. Check is in place to avoid any miscalculations or fat finger errors arising. That was a really fat finger on that one, and it took a couple months to notice. It does not. I hope they get it better next time. I don't know if I'm sold. However, when rechecking this number prior to the submission of April stocks, the submitter identified and disclosed the error, which was immediately rectified by the LBMA. Problem solved. I will contact them, see if they want to do an interview, because as I hope I've demonstrated, hopefully I haven't made an error that massive, but I mean, if I screw something up, I show up and answer questions and do what it is can to make right. This note is lovely. I don't know if it answers the questions I have. I doubt it answers the questions you have, but we'll reach out and see if they'd like to do a live Q&A and talk with their customers, see how that goes. Anyway, on to CFTC news. All right, no, we got the accounting error. I just thought this was kind of nifty. I mean, look at this. I don't know what's going on with Kitco these days. But they were even quoting my Twitter feed. Marcus tweeted, I feel like I almost have to sleep on this one before commenting further, because unless I'm missing something, did they basically just say they didn't add the 118 million ounces they claimed during Silver Squeeze weekend? Maybe my favorite part of the article, on a more cynical side. Oh, come on. I can't even take that prize. Now, what I don't understand is why Kitco is quoting me rather than the CFTC, that transparent Ross Benham is on the prowl for any improprieties in the market. I'm just guessing here, but since his term is expiring next month, interestingly enough, maybe he's got a lot to do. I've asked Dave Franzler for the money line odds of how likely it is that he goes to Goldman Sachs. That would be wild. Because as you see here, and I commented last week, he does know some people at Goldman. Now here, you might think I'm making this up, but this is their own subcommittees. Here's the one he kept citing in that video I highlighted last week, the CCP, interesting name. And let's look at the all-star cast here. Here's Alicia Creighton, Global Co-Head of Futures and Head of OTC and Prime Clearing Business at Goldman Sachs. Ross gave a special shout out to her. Here's Chris Dickin for representing all the Mexican drug lord money launderers, as HSBC was fondly associated with. BlackRock, the sponsor for the SLB Trust, that has a lot of questions that they were not able to answer when I called. But of course, as long as we have JP Morgan's Managing Director and Global Head of Clearinghouse Risk and Strategy confirming to the CFTC that they wouldn't do anything inappropriate despite being fined 920, not fined, settled. Let's get PIMCO in, Vanguard, and where's Citadel? Oh, they popped up on one of these lists. I don't know, maybe it's the other committee. Market structure. Let's see who's setting the market structure. There we go. We got some Citadel, SIBO, CME, Citigroup. Let's get them involved. BlackRock, Bloomberg, Virtue Financial. Vix Weird talks about them quite a bit. Doesn't sound like the guys I'd let babysit if I had children. Some more Goldman Sachs, risk specialist, securities division, PIMCO, and of course, let's get the Fed involved in this regulation so that you can have a direct line that as they debase the currency and people buy the hedge against that, well, we can keep it tamped down. And I'm not making this up. This is the contact tab of the CFTC, which fortunately has a lot of numbers for these folks. And feel free to go ahead and call. Let's see, that is cftc.gov/contact. There's Rostin. I called a couple times today, did not get through. It has caller ID and is avoiding me, who knows. Understandable, but call your favorite CFTC group. I called public relations and left a message today too to see if I can score an interview. I'm sure I will be hearing back on that soon. Anyway, there you go with that one. And also, since I haven't gotten any FaceTime with Ross in person yet, this is where I found that whopper about Alicia Creighton last week. if you just type in CFTC February 23rd, you'll see this baby 4.5 hours long. I'm only a half hour deep, and I'm already making notes. I have some friends who are spearheading the legal effort, and I think they will be interested in that, as well as the great things I've been picking up in my new book, which is underneath my computer at the moment, but by one of the lawyers for the Hunt brothers. A lot of great precedent information in there. I'll look forward to hopefully sharing with Ross in the discovery process one day soon. But let's not get too far ahead of ourselves, because long before I expect that to come to a head, we'll get to watch the U.S. Treasury commit accounting fraud again, as it comes under its national debt. I thought that was gone, but the debt ceiling is coming back. And Treasury officials on Wednesday urged Congress to reduce spending and get the out of control spending under control. They said they've seen enough. It's a real, no, just kidding. Instead, they asked to pass a new borrowing limit or another suspension. Treasury will continue to initiate the types of bookkeeping maneuvers it has used in the past to keep the government from reaching a level that would trigger default. That sounds a lot like accounting fraud to me, but what do I know? The limit will return to whatever debt level exists at the time. National debt subject 28.1 trillion. Fortunately, they don't have to count Social Security or the other unfunded liabilities that bring the total way over. What Treasury essentially uses bookkeeping maneuvers to avoid a debt default. They basically entail withdrawing money invested in government accounts, such as the fund that covers government pensions. The money is always replaced with any lost interest once the debt limit standoff is resolved. So, I'm just going to write that on my tax return this year and see how it goes. Although here I see this is up in Englewood, Colorado. I've been to Englewood, Colorado before, and buy some gas and get some silver with it so you can afford gas going forward. Always a good thing to keep in check. And a few more notes before we wrap up today. Did introduce you guys to BlackRock Silver a couple weeks ago, and they had some drill results. Looked pretty delicious there. 3,322 grams per ton silver equivalent, over 1.5 meters, within 4.5 meters of 1,399 grams per ton silver equivalent in step-out drilling, and reports discovery of new vein at Tonopah West. So here you can see, I'll put this up. So if anyone would like to pause it, you can read the news from BlackRock here. And in under 1 year, we have completed 53,000 meters of drilling and have successfully identified 10 high-grade veins ranging in size from 400 meters up to 1.5 kilometers in strike, all of which remain open for expansion. And again, you can check back. That was about a month ago when BlackRock was on the show, answered a lot of questions. I enjoyed hearing from them. So go to BlackRock Silver, or this one is on Junior Mining Network. So thank you for that. And another piece of mining news. Now, you guys know that I am a fan of Steve Cope of Silver Viper, and I hope it's coming across that I don't say things that I don't mean. And when I say Steve is one of the most impressive people in the entire time I've been in silver and the mining stocks, I do really mean that. And although Steve, sorry, buddy, because apparently there's someone, I haven't met him yet, but could be even ranking above Steve. Because I'm reading through this and I see Gary Cope. Apparently Steve's dad is also, I'm assuming, a mining stock genius. You can see Barcel enters into a non-binding letter of intent to acquire remaining 55% interest in the Barcel project from Agnico Eagle. Mr. Cope, I apologize if I'm mispronouncing that, but yeah, love to meet Gary. Maybe we can get him on the show with Steve sometime. Perhaps that would explain why Steve sounds as knowledgeable as he does. So anyway, part of the Belcara management group, and just wanted to pass that along. A few final notes before we wrap up. I did record this week's Sprott Money call with Craig Hemke, which will be posted Friday morning. I think it was a good one myself. Certainly, it's quite an honor for me. Remember first hearing of Sprott when I was back on the New York Stock Exchange, having my options post on autopilot so I could read Austrian economics during the day and retain some sanity. And, you know, I sending warm wishes to Eric and his family. I know he hasn't been on there a while, and just to be asked now several times in the past few months to share what I'm seeing is certainly quite a privilege in my eyes. And anyway, that will be coming up tomorrow, and I think you guys know Sprott Money, but another place to buy some great silver. Of course, not legal financial advice, just, well, let's see what they got here. Silver, yeah, let's see. Oh, specials, all right. Won't go silver shopping in this video, but probably do it as soon as we're done. And finally, you saw that chart. Last note, I don't know, I've been told I should mention this more. I also try to balance things because I don't want you guys to feel like I'm here just talking stuff all the time, but anybody wants a good overview, or if you're new to the silver manipulation saga, well, this was the book I wrote. Wow, we're doing pretty good. We got a couple 1 and 2 stars, but a lot of 5s. And wow, what an honor to get a review. This was Rob Keen's first one on here, and certainly his opinion, quite honored that he was a fan of the book. And I don't know, maybe the 1-star review, you could have maybe Ross Benham got a copy. I don't know. But in either case, I like it. It was helpful. And if you want to get your own copy, it is here on Amazon. So with that said, I'm going to wrap up for this one, but coming your way in just a moment, video with Discovery Silver that Eric Sprott has talked about quite a bit on when he was still doing those Sprott Money calls. And especially a lot of people ask that question, hey, how come the miners can't withhold supply? How come they don't sell directly to the users? And we were able to dig into that and more with Taj Singh of Discovery Silver. So fortunately, that one is coming your way now.